Hey guys, it's Chris, one of the co-founders of the Orderbook. Welcome back to the series where we break down the platform section by section and explain what everything means in a simple way. Just a quick note before we start. None of this is financial advice. This video is for educational purposes only, and I'm just here to show you how the platform works. Also, I can make mistakes, so if you spot anything that needs correcting, feel free to let me know. In this episode, we're going to look at the compare section. And honestly, this might be one of my favorite parts of the platform, because it answers a question people argue about all the time. Which investment actually performed the best? Stocks? Gold? Bitcoin? Ethereum? Instead of guessing, this section lets you compare them head to head. So let's get into it. Up here, we have the asset race. This lets you pick different markets and watch how they performed over time. For example, here we've got the S&P 500, the NASDAQ, the Dow, and gold. You can choose a starting year, hit play, and watch them race. The important part is that every line starts at 0%, so it's a fair comparison. You're not comparing prices, you're comparing pure performance from the same starting point. And look at the result here. Starting from 2010, the NASDAQ is up around 1,180%. The S&P 500 is up around 405%. The Dow is up around 313%, and gold is up around 134%. So in just a few seconds, you can clearly see which one performed best over that period. Normally, you'd need a spreadsheet for this, but here it plays out visually in front of you. And you control the setup too. You can change the start year and see how the story changes. There's also a leverage toggle. Leverage basically means borrowing money to make the moves bigger. So if the asset goes up, the gains are bigger. But if it goes down, the losses are bigger too. So treat that as a what-if tool, not a suggestion. You can also switch between lump sum and DCA. Lump sum means investing everything at once. DCA means dollar cost averaging, where you invest smaller amounts regularly over time. So this lets you compare two investing styles and see how they would have performed. Now, see these little diamonds on the timeline? Those are event markers. They show real-world moments like market crashes, rallies, and other major events. So when you hover over one, you can see what was happening at that time. That way, you're not just seeing a random dip or spike. You can connect it to real-world history. Below the race, you get the actual data. Total return is the full gain over the period. CAGR is the average yearly growth, smoothed out. Volatility shows how bumpy the ride was. Higher volatility means bigger swings, both up and down. Max drawdown shows the worst drop from a previous high. Basically, the biggest fall you would have had to sit through. And Sharp is like a quality score. It compares the return you got with the risk you had to take. So a higher Sharp usually means better reward for the amount of risk. And it's not just for stocks. You can also compare crypto. For example, here we're comparing Bitcoin and Ethereum over the past year. Both assets start from the same point, so you can clearly see which one outperformed. You can also see the best performer, worst performer, how closely they move together, and how bumpy the basket was overall. And if you want to go deeper, there's a detailed table at the bottom. It breaks down extra stats for each asset, like win rate, best day, worst day, and how it behaves compared to Bitcoin. You don't need to understand every single number at first, but if you want to dig deeper, the data is there. And the color coding helps too. Green usually means something looks healthier. Red usually means something looks more stressed. And that's the compare section. You can race different markets across years or even decades, see which one actually performed best, and then dig deeper into the risk if you want to. It's a really easy way to settle investing arguments with actual data instead of just opinions. That's it for this episode. See you guys in the next one.